All right, good morning. It is October the 8th, 2019, and we are going to go ahead. We've been doing some written recaps over the last few weeks, but we're going to go ahead and do a video recap update, focus on where the portfolio was at. Here's the EWJ, the Japanese ETF that we opened yesterday. When we go into our put call ratio, I don't know if we're going to get the scan today. Looks like we might. Let's see here. No, not looking like we're gonna get it. But well, there's Win. I wonder if EWJ is here. Again, not seeing it. However, we did get this pop up on the scan yesterday, and so we went and we took a look at what we were trading. So towards the end of the day, it does look like got a couple more puts in than calls, but there for a while we were at a put-call ratio of 0.2 or so. And so we ended up taking a look at the trades that we had available to us, and so we ended up going with a vertical bullish put spread, and it currently looks like this. So we're at 56.36. 56 is our break even, our short strike, and then our break evens are down here. Risking 420 to make 80. Again, I do mine smaller positions for illustrative purposes. Okay, so let's go into gold. Our gold position's looking fine. Really nice. We'll very likely profit 57.71% profit, short at 143, long at 134 and 155 to create a risk defined position. OIH, SPX. Okay, so this is one of the positions we've been holding on to for a while. We're just letting time decay do its thing. Still basically a 60% chance to profit on this position. All right, let's take a look at SPY. Okay, so I'm actually not quite sure why we're showing here. This is not accurate here. So this should look like a diagonal, and rather it's looking like just a straight vertical right now. We'll come back. Our break even on the diagonal is right here at 298.96. Let's see here. Yeah, I'm actually not quite sure why we're seeing this look like this. It's all right though. So what we'll do is we will come back here, take a look. TLT looks fine. TLT is looking really, really solid, really nice in between the short strikes. At some point, we might talk about moving this short strike up a little bit, bank that credit. But for right now, we're okay. Uber's looking fine. Uber's continuing to lose money. This is just a really easy vertical, 60% probability of profit right now on this Uber position. UVXY still looking fine. Really easy trade here, right? All the way out here, risking 800 to make 200. And then Win is the other security that we traded yesterday, really far out. So let's go into Win. Okay, so when we are at probability out of the money of this short strike at 81.32%, really wide. Looks like we're going to get a little bit of a gap down, but that's okay. We are really below, and let's even go to our trading strategy. Let's put in Win on the chart as well. So we go here into Win. Let's change our style. All right, so when we look at the chart too, so this is basically, this area, this 102, 103 area has basically acted as a triple bottom right here. And so I'm betting, even though this chart's kind of ugly, right? Chart's a little ugly, looking like we're gonna continue to wash out. I'm playing that we're not gonna wash out before this Friday. So that's the game plan. Not gonna wash out before this Friday, and we have a triple bottom right here. So 102.83, 102 basically on the dot, 103. And so I'm playing both the fact that yesterday when traded 45,000 calls versus 9,000 puts, as well as a put call ratio of 0.2 there, but also we have this chart right here, right? Really nice triple bottom chart. Although I think that if you were to look at a long term, like a month out, I think that 115. So if you were to go month out and sell, now let's go to November, sell the 115s right here and buy the 120s. Actually, you'd have a really nice risk reward there as well. So that's really, and then we're at 14, implied volatility move at 14, which is 121. And we know implied volatility is likely going to be more than what the realized volatility is. And even here, so we've got an implied volatility move of 4, and then we are at 102, right? So 102 is looking fine. So we go to our daily market, major market. We're pretty muddied right now. Pretty muddied. We have this 200 simple moving average that is going to act as a major line. We're below our 50. We are below our 9 EMA, below our 50 EMA. We're going to open somewhere in this area. So I think that this trade that we put on for this week looks really, really good, but I also think that we're going to see another wash, right? So we rallied a little bit. Now I think we're going to see a wash, right? We won't put on another diagonal until we see 2 up days again, right? So we saw up day here, so really strong move from 287 to 294, right? But even further than that, 284 to 294. So, a $10 move in 2 days from the low to the high. So we added a diagonal 2% out here. So now what we're seeing is this 9 EMA acting as resistance still, 50 SMA. So if you wanted to add some additional trades in the SPY further out, we have some pretty significant resistance here. So you could go 3 or 4. You can go beyond all-time highs, set up pretty decent risk reward here. This is still 33% worth of credit, right? 122 to 125, so 25% of credit. You could still